Hi, this is Roger Peterson. In this video, I'm going to go over the tax reform bill that was recently approved by the Costa Rican legislature. The tax reform law was passed with 35 votes in favor and 22 votes against it. Now it moves on to resolve some procedural issues and consultation for constitutional issues before the Costa Rican Supreme Court before it can be finalized and approved as law. So let's get started. Let's go over this law that has caused so much controversy, strikes, and a lot of antagonism between many groups in Costa Rican society. The three main pillars of this tax bill are 1. The introduction of a value-added tax, 2. Modification in income tax rates and guidelines, and 3. Addressing public employee salaries and the way those salaries are adjusted. The first proposal is to take the existing sales tax, which is currently at 13%, and to convert that sales tax into a value-added tax. It's a VAT tax. They also want to make that value-added tax of 13%. So what is it going to do? It's going to include now more goods and services, whereas before the sales tax was limited to a certain number of products. With this new proposal, they're trying to expand the base of products and services that will have to pay this tax. The tax reform bill modifies the existing tax rates as follows. For corporate entities, a sliding scale is introduced that brings the tax rate that goes from 5% all the way to 20%, depending on the gross income earned by that company, as you can see on the screen, the thresholds. For individuals, the tax rate goes on a sliding scale based on the rate of 15% up to 25. And it starts on anything above 1,999,000 colones per month, as you can see on the screen. The tax reform bill also introduces a capital gains tax of 15%. So let's go over that. The law now expands capital gains to include real estate, which in many cases was exempt before. The only exemption now would be for your primary residence. So if you have a primary residence and you sell that, it's not going to be subject to capital gains. The law applies a transition period for those property owners that already have real estate prior to the implementation of the law. In those cases, the rate would be 2.25%. Any other sale of real estate or movable assets will be subject to a 15% capital gain tax. How about rental income? Well, rental income is always subject to income tax, so you have to pay income tax on your rents. However, under this law, it will be exempt from the VAT tax so long as the rental is below 648,000 colones per month. The final component of the tax reform bill was to address government employee compensation as follows. Going forward, it's going to reduce the amount of bonuses and incentives that had been traditionally paid to public employees and which had pretty much ballooned out of proportion. I'll show you an example. In this example, a court clerk with a base salary of 1,117,400 colones could increase that salary by 56% based on the government incentives being offered with the current laws that are in effect. Under the tax reform law, that incentive would be capped at 25% instead of the current 56%. The tax reform bill also caps severance payment. In the private sector, an employee that is terminated without cause is entitled to a maximum of 8 years of severance payment. However, in the government sector, those could be up to 20 years. So the tax reform bill is now bringing that in line with private sector so that the maximum will also be 8 years. The growing fiscal deficit of Costa Rica has been getting worse and worse over the years, and despite attempts by other governments to tackle it, none were able to do so. So now this government is faced with the ultimatum: either fix it or face a financial crisis. This tax reform bill still has some hurdles to go through before it becomes an actual law. So we will keep you posted and let you know as it develops.